Welcome back to Smart Money. We're talking about SEBI's consultation paper on clamping down of influencers and, more importantly, a lot of the fraudulent activities that are happening. So SEBI has, of course, put out this consultation paper. We are in conversation with Vivek Bajaj of StockEdge. Vivek, before the break, we were talking about how the SEBI is proposing regulating of Finfluencers, right? Just to understand, I mean, this is a business which is vast. As Anushka was also telling us before the break, they deal with almost 80, 90, 100 brands. And, people have now realized what the power of social media influencing is. Do you think that this will in any way put a hindrance to some of this brand marketing?
Definitely. Any kind of regulation which gets added into the system is like a filter, and only selected few people who want to walk that path, they become the kind of a service provider, and that obviously stops or it acts as an intermission to the big growth with this industry. But influencer ecosystem is not just about BFSI. Ultimately, there will be multiple domains where people will transit. So people who are extremely focused, they believe in the domain of financial market or personal finance, they will stay and they won't mind becoming part of the regulatory framework. Just to give you some data perspective, it's a market which is going to reach 22 billion rupee by 2025. It's a big market, definitely. And BFSI becomes an important part of that market. But will this regulation degrow this? No. The answer is no. This will still be relevant for the growth of our ecosystem. But definitely last 5 years has seen all kind of people coming in here without any respect for the spirit of the regulation. I think they will move out of the system.
I think self-regulation is also important, right? As Anushka was pointing out, I mean, you can take that call of how much you want to put out there and, what the advertisement should look like. In that context, you said, what, 2,200 crores is the size of this market by 2025, is it?
Yeah.
Okay, and what does it stand at currently?
I don't have exact number handy right now, because the report which I got from a broking firm report, it did mention it was around 22 billion rupee by 2025. So my guess is we should have been probably half of that right now.
Okay, so that's a big growth that we're expecting in this industry. Yeah. But, SEBI is also putting in place a lot of regulations for other industries, right? Whether it's mutual funds, whether it's for people starting new businesses as well. Tell us a little bit about that and how the industry has been reacting.
So if you see the evolution of the regulatory framework, so there used to be majorly a broker who was providing all services to the customer, be it research or advisory or transaction platform. Now, this traditional broker setup is getting disintegrated. And now we have transaction platform offered by discount brokers who believe to be providing a much more specialized platform. Then research analysis, what a broker used to do. Now there are independent research firms with a license RA. In India, there are approximately 900, 950 RA. Unfortunately, that number has not grown also. Then we have investment advisors, people who can just advise to the client and they cannot take the responsibility of transaction. That number would be around, say, 1,200 odd investment advisors. And then as you grow, as you become big, you launch your own PMS or you eventually launch your own AIF. The real problem in right structure beyond mutual fund is for the customer base who want to invest anywhere between, say, 1 lakh to 25 lakh. What is the right structure for that kind of an audience is a big question mark. Sure, there is a small case which is helping people to directly invest in equity, but that is again a broking structure being used to transact. If I want to give an unbiased, very neutral advisory, is that the right structure or not? And how much is okay to be regulated? These are some gray areas where still, I think the industry is evolving. I mean, one of the paper which came along with this was the payment mechanism. I don't know whether you got a chance to look at that white paper. That paper is quite scary. I mean, what regulator is saying that because we want everyone to only deal with a regulated entity, the INRA specifically, we want payment to be collected by a SEBI authorized entity, and that entity will eventually release the payment to IA and RA. So this is, I mean, I'm finding this to go to a level which practically adds layers of restrictions in doing business, as well as from a user perspective, it becomes so non-user friendly exercise where I will go here, then I'll make payment here, then the payment will come. This is not at all in sync to what probably the regulator ultimately wants to achieve.
All right, Vivek, appreciate your thoughts here on CNBC TV18 as always. Thanks a lot for joining us, and hopefully SEBI will take all this advice into consideration and come out with a more balanced approach where the industry thrives and fraudulent practices are prevented. Thanks a lot for joining in. Well, with that, it is a wrap on this edition of Smart Money. Thanks for watching.